There we go. Good morning, traders. So, question for today. What do you get when the Fed cuts rates, but the dollar still flexes? Or, well, basically you get a market that's confused, caffeinated, and running on pure speculation. Welcome back to your live version of the market brief, which has a little bit of everything today. You know, we've got a hawkish Fed, a resilient rand, some natural gas traders who might be sweating more than their furnaces. So, as I said, good morning. I'm Francois, your market analyst here at ATFX Africa, and welcome to your daily market brief, where each morning I unpack the biggest movers across currencies, commodities, and indices, blending fundamentals, technicals, and, well, just the right amount of common sense. Because, well, let's face it, markets don't always make sense. I already see I've got some good morning messages coming through in the comment section. Absolutely love it. Keep it coming. And also, let me know where you are logging in from today. Let me know if you have any questions. Let me know if there's any charts you want me to look at, and I will be happy to do so. Okay, cool. So I think let's jump straight into currencies. So it's been a strong week for the South African rand, which hit its highest level since early 2023, trading at around 17 rand 10 cents to the dollar. So we've obviously seen quite a burst of strength, and you know why this burst of strength? Well, for the rand currently there are three key drivers. Number one on the list, precious metal rally. Gold, platinum, palladium, these are all shining brighter, and the rand is often correlated with commodity strength because we are a commodity-based currency. So this has caused the rand to find proper footing. Then we also have FATF, which, so if you don't know, South Africa has been removed from the global, well, dirty money list, which gave the country credibility and a much needed boost. So this also invited more institutional confidence and, you know, foreign inflows. So just to clarify, so yes, we have been removed from the grey list. So yes, that is definitely a big one for us as well. And then number three is rate speculation. Markets are still digesting Powell's comments after last night's 25 basis point cut, which he described as, well, not a foregone conclusion for another in December. So that hesitation took some steam out of the dollar, giving riskier currencies like the rand room to breathe. So yeah, definitely some opportunities shining quite bright for us there at the moment. Having a look at the charts, the pair is hovering near, well, at the moment, 17 rand 22 to the dollar, with this, or near as well, this inflection zone that we have here at the moment. Now, an inflection zone is a zone that attracts both buyers and sellers. So, and that inflection zone is sitting roughly at around 17 rand 15 cents, which traders are eyeing very closely at the moment. So this level has acted like a psychological tug of war for institutions at the moment, and a break below could open up the door for a push back down to the 17.10, or maybe even all the way down to 17 rand to the dollar. While if we can hold above the specific level, we could see things being kept in consolidation. So my question to all of you here today is, What do you think? Will the rand keep dancing to the rhythm of gold and other commodities, or will the dollar pull the plug on the music and, have this specific currency pair rising once again? We'd love to hear from you in the comment section. As I stated as well, if there's anything that you want me to look at today, please let me know and I'll be happy to pop up my analysis for you on that. Moving over to commodities. Now, the commodity for today that I want to cover is natural gas. So on that front specifically, natural gas prices have been taking a small step back this week, dipping below $3.20 per million British thermal units after an impressive rally earlier this month. But don't let the pullback fool you. The story here is all about balance and build-up. So fundamentally at the moment, production remains robust, which is near 108 billion cubic feet per day, keeping supply comfortable heading into winter. Storage levels are still 5% above seasonal norms, which is easing any fears of shortages. And with temperatures across the US expected to stay mild through mid-November, heating demand isn't quite ready to spike as yet. However, liquid natural gas exports remain strong at 16.6 billion cubic feet per day, hinting that demand could return once winter truly kicks in. So, with that being said, let's have a look at the charts. Now, looking at the chart at the moment, the market is wrestling with this $3.10 support that we are seeing here at the moment. Now, a break lower could see us potentially sliding all the way back down to this $2.90 level. While if we can bounce, which we are seeing this now here at the moment, so if we can get a nice clean bounce and a change of character here, that could push us back towards this $3.35, maybe even $3.60 level, especially if colder weather forecast creeps back in, which will increase demand on natural gas. So it's kind of like the quote I read this morning from one analyst that stated, the market's warming up for winter, just not yet literally. So there's definitely some potential that is lurking just below the surface, but some other opportunities that are still a possibility as well. Rokar says would love looking at gold. Okay, cool. And then Wisdom asked for USD CHF. And then I think Rand versus dollar will consolidate for another month or two. Interesting. Very, very, very interesting. Okay, I think let's kick things off with the first request that I got, which was gold. So let me pull that up. And I want to drop down to a much, much lower time frame. So obviously we looked at this last night as well during my masterclass on how to trade gold specifically. And I actually stated that, I was waiting for it to come back into this zone over here and then give us a change of character, which obviously we never got that entry because the price action just kept pushing, and there was no change of character to show the bounce on this one specifically. Going into today, I just want to have a look here. Today started there. So this is basically your Asian range on gold at the moment, which we have now seen that break literally about 15 minutes ago. So here's that, you can see clear change of character. Yes, this is more or less what we were waiting for yesterday, but it's a new day, and especially if we are scalp trading, personally, the setups that I would look for would look at today's data. So, price action was consolidating this morning here between 3,920 and 3,980. We have now seen that break. So now kind of what I would like to see is a potential retracement. So remember what we discussed last night regarding the pullback. So, a bit of a pullback. After the pullback, push back, break of structure, and then we could potentially see some nice bullish momentum coming into gold today as well. I mean, even if we're looking at higher time frames at the moment, so here on the hourly, things are definitely turning bullish. I would say there is a relative amount of resistance currently hovering here around 4,030. So even if we're dropping down to a lower time frame, that might be a nice place to take some partials, maybe even securing profits based on again, we need to see the price action confirmed first. So I would want to see a pullback and then a bounce on this before we just randomly, enter into trades. Remember what I said last night. If you're not managing your risk on gold, gold will ruin you, if that makes sense. So yeah, this is a very, very nice potential setup in this regard. We've got that nice clean break. Now all we're waiting for is that pullback, and then we can go from there on forward. Okay. Rocast, if you have any additional questions for me on gold, I'll be happy to elaborate if anyone wants to discuss any of that further. Okay. I do see here a message that says, thank you. My analysis on gold is on par with you. Appreciate. High five. Well done. Okay, cool. Let's move over to USD CHF. So I did discuss this one on Monday. And, we had that bit of a break of the channel earlier this week. So we had that breakout, beautiful pullback, and then we got a sell-off, and then obviously the dollar made a massive comeback last night. Like I said, Fed cuts rates, but dollar is still flexing on us here at the moment. So pushed all the way to that resistance area last night, and then got a nice sell-off from there. So on this one specifically, wisdom, depending on what type of trader you are, I would say, if you are looking for long positions, I would wait for a nice clean break above the resistance here at 0.802. That's kind of the break I would wait for. Or if you wait for a pullback all the way back to the support sitting here at 0.796, that could be a nice little buy the dip area as well. If we are looking for some lower time frame intraday trade, so if we're dropping this down to about a 5-minute time frame, we can see that from this area here, we got that push down. And then that kind of continued, and now we're seeing a bit of a pullback here. So this pullback area, if you are looking for shorter term trades, a break of this general area here. So I would kind of wait for the break of structure down here at, let's call it 0.798283, around there. And then once that happens, we could look for some intraday short positions here with about a 15 pip stop loss, and then obviously you can go for a 1:1:5 ROI on this. So that would aim for around that 0.796 flat. So that could be a relatively nice setup. Again, if price action plays along, because while we did get that spike into that liquidity zone, pullback, and now we're getting a bit of consolidation. So now if we get this break of structure here again, that could set us up for a nice little scalp trade there. But again, I would wait for price action to confirm that move first before just jumping into the market. Okay. Wisdom says, yes, he's looking for a buy around 796. 796 might be a little bit soon in my personal opinion. Because that's Oh wait, yeah, actually, that's kind of exactly. Sorry, that's exactly where this intraday short position would bring us to. So yeah, not a bad area. I would just say beware of the potential for this to spike maybe and just going testing this lower area down here at 794, 793. So just obviously manage your position sizing correctly and so forth if you do get in. But yeah, if you get a nice rejection here on 796 and you can get a decent change of character there on some of the lower time frames to confirm the renewed bullish momentum, that could be a nice setup as well. So yes, well done on that. Okay. Cool. Doesn't look like there's any other requests at the moment. I do see the amount of viewers are ticking up as well. Please remember to click that like button. I would very much appreciate that. So please remember to click that like button. And if you want to ask a question, please remember to subscribe to the channel, which will then allow you to ask a question in the chat section. So our chat is only open to subscribers. So please remember to subscribe to the channel, and then you'll be able to ask me a question as well. Okay, let's move on to indices, which that has been a roller coaster since last night. So if we have a look over in the US, the S&P 500 continues that cautious climb that we have seen over the last week or so. It's sitting currently around 6,885 points, just shy of its record high. And traders are juggling mixed emotions at this point in stage. You know, we've had a very wild 24 hours. We've had the Fed announcement last night. We've had tech earnings. So let me break down the fundamentals for you here quickly. So obviously last night, the Federal Reserve cut by 25 basis points. No surprise there. We all kind of expected that. But Powell's don't get too excited tone cooled expectations for another move in December. So markets were pricing in quite a large opportunity for another cut in December, which that has dimmed a little bit now. Then on the earnings front, the Magnificent Seven are starting to show some cracks. So one did very well. Alphabet surged nearly 7% on strong results, but Meta took a nosedive after a hefty $15.9 billion one-time charge. We also saw Microsoft slip 4% on the back of OpenAI related costs. And adding all to this, you know, the US and China's much anticipated meeting, which took place in South Korea, delivered a more diplomatic tone, which is fueling cautious optimism about global trade stability. Now, if we have a look at the charts here, the index remains in an uptrend, but it is approaching that 6,920 resistance zone, which has capped momentum before. Now, momentum traders might see some short-term choppiness, and I mean, we've seen some serious choppiness since last night, as investors digest earnings from Apple and Amazon, which is due later today. So, as a question, you know, do you think Wall Street is setting up for a year-end sprint, aka Santa Claus rally, which I will be discussing in next week Wednesday's masterclass? Or is it just catching its breath for another round of volatility? I would love to hear from all of you on that. Okay. If we do look at some lower time frames on this at the moment as well. So yeah, I also just showcasing here, I did draw in my fib here as well. So there could be some very nice buy the dip opportunities sitting here around 6,700 points, which is that 61.8 retracement level. So we have that golden zone opportunity here as well. So that could be a nice little buy the dip. But I know S&P also likes coming back to this 50% zone and then buying from there. So I also have this additional support area, which is that liquidity zone that I drew in there as well. So looking at some lower time frames, we are actually seeing a nice little opportunity here at the moment. So earlier today, so this was around 9-10 o'clock when the UK market opened. We did get this break of structure, small pullback, and now a break of structure here as well. So this could actually be setting up. Now, obviously, this candle is going to close now in the next 30 seconds. So this could actually be a nice little small scalp trade. Maybe do like a $15, so about 150 point stop loss. And then, if you have a nice little 1 to 5 ROI on this, or ROR, sorry, that'll give you a target range of around 6,860. So if we get the entry around where we are sitting now at around 84, 85, with then a push down to 6,860, that could be a nice little setup, as this short-term momentum could be, creating a bit of choppiness here, and we are seeing this price action pushing down lower. If you do want to wait for some additional confirmation, you can always wait for a close just below the 6,880 flat level, which would then maybe extend this a little bit to around, let's say 20, make it 19. And then your 1:5 risk to reward would push you down to about that 850 level, which is also a very nice round level on S&P as well. So that could be a relatively nice short-term setup. But again, just maybe wait for that price action just to confirm that that bearish momentum here. But there is this break of structure that we just saw in the last 5-minute candle. But if we do go up a time frame, so if we have a look here on the 15-minute, we haven't seen the break of structure yet. The break of structure on the 15-minute would only take place at this line that we drew in a little bit lower. So if you want to wait for that little bit of additional confirmation before getting in, that'll be great as well. Okay. How would we go about looking at Ethereum or Bitcoin? Rocast, please elaborate on the question. But I can pull up Ethereum and Bitcoin for you as well. But on this one, I'm going to go slightly higher time frames. So earlier today, we got this very nice bounce here on 108,000, and then now here at 9 o'clock, we got that change of character. So obviously on Bitcoin, I'm a traditionally bullish guy on this. So if we do have a look, overall momentum on this is obviously still up. There is obviously a relative amount of consolidation that we've seen over the last while, where we're just trading within this range. But in the last 4 hours, we can see this massive liquidity spike right here. So there's that massive liquidity sweep here. So that was this push here into this liquidity zone, which then had that bounce back up. We saw the change of character. Now we have that little pullback here. So on this one, this would be a day trade, not an intraday trade. So this could be a little bit of a day trade with a long position here around 11,700. Obviously, you'll have to place your stops below these previous spikes. And then if you're going, 1:1 on this, even, you'll aim for around 115,700. If we're going 1:5, that pushes you to around that 117,800 level potentially. But again, I would just wait for this move back up, get that break of structure, have price action confirm everything for you, and then go from there. If we have a look at Ethereum, the setup will be very similar. Ethereum, however, if we do look at this, is still very much in this downward channel that is quite strong here at the moment. So before decent bullish momentum would, in my opinion, return to Ethereum, we would need to break out of this basic downward trend that we've been in for the majority of the week, so since Monday. So for the entire week, not the majority of the week, for the entire week. So this consolidation channel for me on Ethereum needs to break first. So I would like to see a break of that 4,000 level for some decent bullish momentum to return on this. Or it might just keep trading within this consolidation range for the next foreseeable future for now. Okay. I hope that makes sense. Okay, so he actually commented back. He said, I'm looking to get more familiar with digital gold and silver. So the nice part is both Bitcoin and Ethereum have been reacting to fundamentals a lot more in the way that they should, but they've also been reacting to fundamentals as less of a safe haven and more like an equity. Okay, so if you have a look, Bitcoin and Ethereum have been reacting to fundamental news lately very similarly to what we are seeing NASDAQ and S&P 500's reaction to the market is, and not necessarily similar to what gold and silver's reaction to the market is, where obviously both Bitcoin and Ethereum are seen as digital safe havens, but the market has treated them lately more like digital stocks than digital safe havens. But at the end of the day, price action is still price action. So just analyze accordingly, go through the fundamentals. I did share some fundamental data regarding Bitcoin specifically on Tuesday. So during Tuesday's live. So if you maybe that the recording is on the channel. So if you want to, go through that, or it was also in the email that I sent out to all ATFX clients. So if you are a client, you'll have it in your inbox and you can have a look at it there as well. Okay. So I hope that helps. Thank you. I appreciate that. Makes a lot of sense. Beautiful. I love it. Thank you. I appreciate it. Anything else you guys want me to look at today? So obviously during this session so far, we've looked at USD ZAR, we've looked at USD CHF, we've looked at gold, we've looked at natural gas, we looked at S&P 500. Anything else you want me to look at? Anything else you want to discuss? Oh, and we also looked at Bitcoin and Ethereum. That's about 7 instruments already for today. So definitely went through quite a bit of markets already. Anything else you guys want me to look at? Anything you want to ask? Anything that you are uncertain about regarding market structure at the moment that I can assist with before we move on? I'll give it a second. Otherwise, I think we are going to call it a day for today. So please remember as well that tomorrow session will tell us, well, whether this newfound optimism is built on a solid ground or just hopium, So, I mean, between China and US trade truce, Powell's cautious tone, and energy markets heating up, today and tomorrow could be a, cocktail for opportunity or a hangover waiting to happen. Both are options at this point in stage. So, Wisdom, I just want to know about the effect of interest rate cuts on the US dollar. So, Wisdom, obviously, remember the interest rate cut now already took place last night. Interest rate cuts traditionally are bad for the dollar. Okay. Last night, however, we did see the dollar still strengthen, but I have explained why. So, as I stated earlier in the session as well, remember, interest rates cuts are normally negative for the currency, which does normally act for the currency to weaken. However, Powell stated after the interest rate cuts in his press conference that markets shouldn't get too excited, as there is a chance that we won't get another cut in December. So he did take a bit more of a hawkish tone. And that hawkish tone allowed the dollar to strengthen. And that is some of the spikes that we saw late last night as well as this morning. So, yeah, I do hope that answers your question on that. I'll give you guys a second to answer. Oh, I see. Thank you very much. Okay, perfect. Well, I think then that wraps up our daily market brief. As always, please remember that this is brought to you by ATFX Africa, which is the broker that gives you an edge in today's markets. Now, if you are not a client of ATFX Africa yet, click on the link in the description and, well, go and experience the difference for yourself. Okay. I do see I have a message here from Misha, which says, when writing for break of structure, must you wait until your candle moves past the last red on the left? Please see current gold move. Okay, cool. Okay, so let me open this up for you here. So this is just consolidation at the moment. You want to see a bit more of a pullback, but yes, to get break of structure, you need to, if you have a look here, let me show you an example. See there? So you see you had this similar consolidation, but you have a bit of a pullback consolidation, and then you have a clean break below the lowest point. So the lowest point would be this week high up here. So that's where break of structure. So you see that red line that's already in there? That's my break of structure that I'm waiting for. Now I'm waiting for a push and a candle body close above that. So that would be a decent break of structure, unless we get a little bit of a pullback lower and some new structure forms that there's a possibility for a lower break of structure, which would also be a test closer to this actual zone, because we are quite far from the zone at the moment. So the risk management on this trade is also going to be a little bit difficult to manage, because theoretically you're going to have quite a large stop on this. Okay. But I hope that answers your question on that, Misha. There we go. Cool. So, traders, until next time, I'll see you all tomorrow. But until then, stay sharp, stay focused, and trade smart. Have a lovely day further.